Let's highlight a couple of stocks. I'm looking at NMDC, two brokerage calls coming in today. Citi is one of them. They have a sell rating on the stock with a target price of 60 rupees. They think that NMDC's prices could correct in the near term. Few factors they've given out. Point number one, NMDC's price premium to export parity should normalize. They point out that currently it's at around 40% premium. In the past year, it was at around 20% premium. So that's why they expect it to correct a little bit. Lloyd's Metal, they've cited this example that company is looking to increase their iron ore capacity from around 10 to around 25 million tons in the coming fiscal. So that's definitely going to put pressure on pricing. They also expect domestic steel prices to correct as steel imports pick up. And they believe that iron ore market is likely to remain in a small surplus in 2025. Finally, they wind down on the valuations point that the stock is trading at around 6 times EV per EBITDA, which is not particularly cheap. Kotak is the other brokerage that is written on it. They have a sell rating, target price of 55 rupees. They say NMDC has cut prices marginally in this month, but they expect further cuts in the coming months. They also go on to highlight that domestic iron ore prices are at an 8% discount to import parity. That compares with around 20% historically. They also point out that ongoing weakness in steel prices could trigger some kind of normalization. And finally, they also make that point with regard to ramping up of merchant iron ore mines in India and weaker exports. That's what could add some pricing on pressure. They wind the note down with pointing out that fundamentals of seaborne iron ore market remain challenging. So both Citi as well as Kotak have a sell rating on the stock. So keep an eye out on that one today.
All right, Nigel, thanks very much for that. So keep an eye out on these names as we are awaiting market open. There's